Yo, what's going on, guys? Welcome back to another video on the channel. Today, I want to go ahead and prepare you the best that I can for the upcoming event tomorrow. As you guys may or may not know, which you should know, tomorrow the federal funds rate is going to be announced. This is the first time in a very long time where we may see the federal funds rate above 0%. Now, the reason why the Federal Reserve is most likely going to increase this rate is to try to hedge inflation. We have seen some of those readings coming in quite high. So in today's video, I want to go ahead and share with you guys how you can see what the market is currently expecting, what they are currently pricing in for that interest rate hike. And we'll also go ahead and talk about what the market did today and whether we can really trust the upside that we saw. We'll also go ahead and talk about the potential outcomes, whether the Federal Reserve goes ahead and spikes the interest rate higher than what's expected, or if they push it lower than what's expected. We'll go ahead and talk about all the scenarios, how we can best prepare for the upcoming event tomorrow, and how we never want to try to predict what is going to happen, but make sure that we are aware of all the outside factors, everything that can affect our positions, so we can make sure to protect our capital and make educated decisions. So let's go ahead and jump into this video. Press that like button if you guys do enjoy it. Subscribe to the channel and make sure to press the bell down below so that you guys know every single time that I post. All right, guys, so the first thing I want to go ahead and share with you today is the federal funds rate futures. This is on your screen right now. This is the /ZQ. Now, you can use this futures contract to get an idea of what the market is currently expecting for the federal funds rate. As you guys can see right now, we are closing today at around 99.64. Now, how do you get to an interest rate number? You actually do 100 and you subtract the current closing price. And you guys can see on your screen, as of right now, as of close today, the expected federal funds rate, the futures, which is expecting into the future, is 0.36. So right now, the market is expecting and pricing in about a 0.35, let's just call it 0.35, federal funds rate. Now, whether we get that tomorrow, whether we get that in the future, I am not sure. I cannot predict that. But that is what the market is currently expecting. That is what the federal funds futures are currently trading at. So what happens if we get a higher rate from the Federal Reserve or a lower rate? For example, let's just say it comes in, let's say that we come in and get about a 0.5. That would be down here, right? So 99.5 would give us about a 0.5 federal funds rate. What if we get a 0.25? That would bring us up to around 99.75, which is right around here. So this sort of comes in like earnings, right? If you guys are familiar with earnings and familiar with IV Crush, this is very similar in a way that how the market will react. Let's say that the market gets an expected move of, say, $20 on earnings. Let's say you're trading Apple calls and the expected move is $20. Well, if it stays within that $20, then the option contracts decline. If it goes outside of that $20, that is when you get those big moves. That's when you get those big, large contract increases. Now, if we were to compare those scenarios, what I believe as of right now is that if you get a larger than expected, or if you get an outside of the expectation move on interest rates, let's say you come in light, or let's say you come in too high, that is where I believe you get a large market reaction. Let's say we come in at 0.25, where right now it's expecting 0.35, or let's say you come in at 0.5 on the federal funds rate, where you're expecting 0.35. I think if we get those extremes, if we go outside of what's expected, that is where we can expect large moves on the market. Now, I'm not here trying to predict which direction it goes, because I can make bullish or bearish scenarios in both directions. On the bullish side, I can say that either of them are good. I think we can all say that. Let's say we get lower than expected federal funds. That could be a bullish thing because interest rates are not as high, right? Maybe that is how it is taken. Or on the flip side, if you get a higher interest rate, you can make that bullish as well. You could say, hey, inflation's going to be hedged better. We're getting ahead of the possible inflation that is continuously increasing. That is bullish, right? So I'm not here to argue whether one side is bullish or bearish, because I think we can all theorize in our heads that both sides are bullish and bearish. I'm not going to try to predict what happens. What I'm here to share with you guys today is where you can expect large moves, and that is if the interest rate is different than what the market is currently pricing in. I think we can all know, if we are experienced people that are around the market likes to be comfortable. It does not like to be surprised. And if the market is surprised here tomorrow by what the Federal Reserve says, then I think we should expect a large move. So this is why this is very important, because when we see that rate, when we see what it is tomorrow, if it is very different than what's currently priced into this market, I believe there should be large reactions. Which direction that goes in, none of us can try to predict that. None of us can be 100% correct on that prediction. All we can do is see what the rate comes in, see what the instant reaction is, and try to take advantage of what that market is pushing, in which direction that market is pushing. We'll have to react. We'll have to be reactionary. We can't really try to predict this. That's my personal opinion. Feel free to leave in the comments down below what you guys believe. Let me know your bullish case. Let me know your bearish case. I would love to hear some of your opinions, and let me know what you guys think about tomorrow. So with that said, I hope this gives you a good idea of what the market is currently pricing in and what you can expect if the market, or if the Federal Reserve, goes outside of the boundaries. If they are either too low or too high, different than what's expected, that is when I believe you get the volatility. If you stay about what is expected, then I don't think you see as big of a reaction off tomorrow's news. So with that said, now I want to go ahead and go into what the market did today, go over the NASDAQ, go over the ES, give you guys some analysis on what we did today with some technical analysis, and get an idea of what we can see tomorrow. All right, guys, so on your screen, we are looking at the NASDAQ, and we see today that the NASDAQ closed up about, I think it was around 2 to 3%. I'm not sure the exact percent, but it was a green day for the NASDAQ. It was a green day across the board. Now, why did we bounce? What was the reason for the bounce? Well, I think the first thing is that it was just a little bit of a relief push and a little bit of a technical bounce off a very key level at 13,000. I think that was the main driver behind this move. I think we came back down to a very important level, a level that we have talked about quite a bit on this channel, especially in the pre-market live streams. If you guys come and hang out on those pre-market live streams, we have been watching this $13,000 level. And today, we got another bounce off of it. After about 3 days of selling, there's always a little bit of relief, and we can see that that is the current trend in this market. So do I trust this bounce to the upside? Do I think that this is the start to an upside move? Absolutely not. I am not trusting this right now whatsoever. I will need much more from this market to think that we are going to move higher. Tomorrow, maybe that gives me some more confirmation. If the market does push higher tomorrow off the federal funds rate announcement, maybe that does spark a little bit of bullish action. But there is still a lot of things looming in the macroeconomic environment, which makes me very cautious here on this push higher. So first of all, to answer that question, do I trust this bounce? Right now, I do not, and I think you would be foolish to do so. You could get lucky and get behind and get to be the first to a potential upside move, but I think that is quite advantageous as of right now. So we can see a push lower. That trend is still there. 13,000 back here from April and May of 2021, we can see that we bounced off that level pretty nicely today. If we zoom in, I just want to show you guys what the current trend is in this market and where we can try to see where things could maybe flip just a little bit. So we can see here on the NASDAQ, the blue line on your screen, that is the 20 SMA, and I have been using this 20 SMA quite religiously. This 20 SMA has been very strong, and it has continued to hold the price of the NASDAQ lower, and that is definitely something that I need to see break before I can turn bullish here on the NASDAQ and on tech in general. So you guys can see over the last, say, 3 months, every time the NASDAQ has pushed into this 20, we have rejected right at that level. So that is definitely a number one thing in my mind. If we get any more upside, are we breaking the 20 SMA? That is going to be a very important thing for me to keep an eye out for, and I think you should watch it as well. So you guys can see, after about 3 days of selling, we're always seeing a pushback to the upside. This was a pretty extended move. We did get that push. 3 to 4 days, push higher. 2 days, push higher. 3 days, 4 days of downside, we got a push. 3 days of downside, we got a random green candle. And then we get 3 more days of downside. So is this breaking trend? Is today breaking any type of trends to the downside? Is this abnormal? Does this make me think that things are changing? No, I don't think that would be correct. I think this trend is still very strong. And this is just one of those days where the market does bounce off a strong technical level, 13,000, a lot of expectations into tomorrow. Maybe some people taking some bullish bets, maybe some shorts covering because they don't want to have equity into tomorrow. They don't want to have money or risk on the table. That could be a lot of reasons why we saw the push higher today. We will need much more here to make me believe that there is upside on this market. So I just want to clear that up. I wouldn't get too excited about this push higher. Of course, I could be wrong tomorrow. We could get some upside here off the federal funds announcement. Maybe it does spark some type of bullish movement. But as of right now, if we are not trying to predict what happens, if we are just reading what is in front of us, the move today to the upside, in my opinion, is just one of these green candles that is getting a push higher off maybe a technical level, and it doesn't seem that strong. The volume was very low over the last 2 days. You guys can see that on the bottom of your screen. And I just think that this is a candle that maybe we would be better off ignoring, not getting ourselves too excited, sticking with the current trend, which is to the downside. And my number one advice to anyone that asks me, especially in the community, do I trade anything through tomorrow's announcement? My answer to you guys, to be truthful and to say what I'm doing personally, is to stay away. I would stay away. I would protect your capital. I never like to trade on days where there's huge macroeconomic news coming out because it is very, very unpredictable. You can maybe try to trade some of the momentum after the announcement. Maybe there's some scalp opportunities. But would I be taking large opportunities here, large swing trades through a macroeconomic event like tomorrow? Absolutely not. That is too risky for my taste. So as of right now, just sharing with you guys, NASDAQ 20 SMA, a little bit of a $13,000 bounce, but the bounce today is nothing that makes me change my current idea of what this market is doing, and that is downside. The next one we can see here, this is the ES, this is the S&P 500, and this is a very, very similar chart. What you guys can see here is that we are sort of on that same trend. 20 SMA continues to hold this market down, and every time we push into it, we reject. Today, nice green day on the ES. Futures are slightly down right now, nothing much, but we can definitely see that today was a nice green day. Same volume as yesterday, nothing too large. It looks like just another little green day after a pretty extended sell-off. So we'll see what happens tomorrow, guys. We can sort of make the case that we are trying to hold this 4150 level on the ES. Tomorrow is really the deciding factor. What is the reaction tomorrow? Do we get any type of upside on this market after tomorrow? Do we break the 20 SMA? These are things that I think someone that is patient, someone that is wanting to protect their capital, someone that is not trying to just gamble in this market, I think that is what the correct thing to do is. If that's sort of your goal, to protect your capital during very high volatility events, very high unpredictable events, to make sure that you are not taking trades that are just based off really nothing or trying to predict the next upside move. If that's not your goal, then I think the best thing here is to just stay away, keep your hands off your mouse, make sure you watch what this market does, get a feel for how the momentum is, because right now the trend is clearly down, but things can clearly change in the future depending on what comes out tomorrow. So as of right now, I wanted to go ahead and share with you guys my analysis here on the ES and the NASDAQ, get you an idea of what happened today, which was a nice green day across the board. Congratulations if anyone caught any of that upside. But if we go ahead and zoom out on the daily chart, it really is nothing that is changing my mind on this market. So NASDAQ, ES, green days. Tomorrow we need to see what the Federal Reserve says, what the federal funds rate is going to be, and how the market reacts to that news. Like I said earlier, if it comes in lower or higher than what's expected, I would expect a pretty large move here tomorrow. I think the market would be shocked by that, and I think the market would definitely move. I'm not sure the direction, but I would expect a pretty large move. If it comes in what's expected, if it comes in what the market is pricing in, then I don't think it will be drastic as maybe some of us are thinking. So that's what I'm thinking, guys. That's my analysis on the NASDAQ and the ES, getting you a little bit of an idea of what I'm thinking going into tomorrow, giving you some ideas, giving you that /ZQ so you guys can go ahead and see what the federal funds rate is currently pricing in. And I hope that this gives you a little bit more preparation heading into tomorrow. Of course, Come hang out in the pre-market live stream tomorrow where we will talk about all of this in the morning. If there's any changes overnight or tomorrow morning, we'll go ahead and talk about it. We'll prepare the best we can. And good luck tomorrow. If I don't hear from you before tomorrow, if you don't watch a video from me tomorrow in the pre-market live stream, best of luck during this event. Make sure to be careful. Don't go ahead and put your entire portfolio on a play into the federal funds rate announcement. I think that is very risky. It could be very good. You can make quite a bit of money if you are correct, but predicting the market just doesn't seem like the right thing to do right now. So guys, thank you so much for watching. I hope you did enjoy just this short preparation video. Make sure to stay safe out there, and I hope to see you in the next one. Peace.